Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking energy, let's talk crude oil. Crude oil broke out yesterday to the upside, getting above $67. First time that's happened this year. And then we got a normal technical pullback on crude oil. That technical pullback is one that needs to be bought, and it is getting bought in toward the end of the crude oil trading day as we get a slightly positive end to the day on WTI crude. What happens is you get a breakout, and in a normal technical pattern, there's excessive speculation to the upside. Those who had been long, lower, below expecting this start to sell it off. They sell it off, and then those looking to get long at the top of the sideways channel, which would have been the breakout point, get in, and that's what we're seeing right now in toward the end of the day. So it's a normal pullback from a breakout of a channel. It's a good sign for the market if you are long or if you're bullish crude oil. EIA data yesterday was mixed. We had pretty much unchanged refinery utilization, but you looked at a build in crude oil and then a build in gasoline, but the build in crude oil was offset by the overall stockpile still being below the 5-year average. So the OPEC production cuts and the demise of Venezuela continue to work to reduce that glut as shale continues to produce 65,000 more barrels now added to the shale production, but they're producing at a pretty responsible pace. They're not outpacing even the fall of production in Venezuela, let alone the production cut from OPEC and Russia. OPEC did produce steady at their production cut rate, but Russia produced a little bit over, so we have to see if that's sort of a symbolic or systematic rather of Russia starting to exceed production, or if this was just one of those 1 month technical factors that often happens with crude oil production. Remember, with the production cut, OPEC's going for 6-month time block averages, not just one individual week or month. So the Russian thing doesn't really worry the markets at this point. And then on top of that, we have Yemen and Syria, geopolitical tensions with those two nations, which Syria really went from 1 million barrels a day production to about 140,000 a day in 2014. So Syria is not as big a deal. That would be more about it spreading between the US and Russia. Russia, of course, being the largest oil producer on record right now. So that's where the Syrian tensions would come into play. Yemen, on the other hand, the Yemeni rebels are firing missiles into Saudi Arabia. They seem to have more advanced military technology as of late. So far, Saudi Arabia has knocked down all of the threatened attacks. They've shot down a total of about 6 missiles now over the course of the last month and a half. One of them was targeted at a Saudi Arabian oil tanker. It hit its target, but the tanker was able to arrive at its destination with its payload, so there was not enough damage. So more worried about the Yemeni missiles than some sort of tension with Syria, because I think the US and Russia will sort of work that out before it affects any sort of trade issues in the crude oil markets. But as of right now, again, similar to gold, a normal pullback after a breakout gets bought in toward the end of the day. Crude oil finishes slightly higher after falling through most of the session. This is Bob Iaccino talking crude oil futures from the CME Group trading floor in Chicago.